nice.
You don't want to go back?
No. Temperature controls are much better. I don't start my mornings, roasting and then breathing by the afternoon, or vice versa. It's nice and even keel. Looks like there's a few more coming on. I think we're also live. Great. So, good morning, everybody. Thanks for joining the July Financial Committee meeting for SORTA. We'd like to start with the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America,
to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, we'll jump right into our action items this morning. First up is our annual financial audit. And actually, Heidi, let's start with the approval of Finance Committee meeting minutes. Oh yeah, I was just so excited for the audit. Forget this. I don't hear that often. We do need to approve the Financial Committee meeting minutes for June. Let's do that first. I'd like to, Craig, are you making a motion?
I motion that we approve. You second. Yeah. Second.
All in favor, say aye.
Aye.
All opposed, say right. Okay. June committee meeting minutes are approved, and now we can go into the financial audit. And with that, I'm turning it over to Hope and Tim, who are going to walk us through the report.
Thank you. My name's Hope Wheeler. I'm a principal with Clifton Larson Allen. Can everyone hear me okay? Okay, very good. I believe that you all received a draft of your 2019 audit, your CAFR, Comprehensive Annual Financial Report. Fairly large document, so what I'm going to be reviewing is this presentation summary that Tim and I put together. Tim, you want to introduce yourself real quick?
Absolutely. Good morning, everybody. My name is Tim Leffler. I'm a director with Clifton Larson Allen, and I've been working with SORTA for a few years now. We won't say how many.
All right. Jumping to the first page 2 of the presentation document. The objective this morning is just to go through and give you an understanding of the audit process and the scope of the audit. We're going to discuss the highlights of our individual deliverables that are part of the audit process, and then the steps that remain for the finalization of the audit and any questions that you might have. On page 3, the deliverables for our audit as part of our engagement letter is we are going to provide an opinion on your comprehensive annual financial report, or your CAFR. So our audit of that report. And then we also provide governance communication letter that's required by our standards to you as part of the governing board to share certain required components related to the audit, as we want to communicate with you directly as a governing body. And then a management letter provides any other recommendations that we want to share with you. Then the last item that it's wordy there, reports issued pursuant to 2 CFR Part 200 Uniform Guidance. What that says in short is because you expend over $750,000 in federal funds, we're required to do the single audit. And as part of the single audit, we issue 2 different opinion letters. So we'll talk about those also. So the terms of the engagement, as mentioned before, to express an opinion on your 2019 financial statements. This is page 4. Then we'll issue internal control and compliance reports related to that single audit I mentioned, your federal audit, and we'll prepare a data collection form also, which summarizes all of your federal expenditures. And then we also, as part of the audit process, test your compliance with the Ohio compliance supplement, so some state compliance requirements, and then summarizing any audit findings and observations and sharing them with management and to the audit committee. Page 5 of the presentation, just to briefly talk about the audit process. As you know, we're not auditing every transaction. So what we do is we have brainstorming sessions internally, and we come up with what we feel higher risk areas are. We use this risk-based approach. And then we select samples of those areas, or do just certain required testing in some areas we always have to do. Then we do select some unpredictable items, so they don't necessarily know what we're going to test each year also. Just to summarize the work we did, the blue boxes there, we're always going to look at internal controls. So we select transactions, we do some samples in this area, and walk through what controls that you say that you have in place to make sure that we see those operating effectively. Some other main areas we look at are your accrued pension and OPEB, other post-employment benefits, such as like health insurance or health benefits. Those are large estimates, so that's an area we look into closely. We also look at revenue recognition and the timing of your revenue recognition, and we confirm a lot of your revenues with the outside entity. We look at compensation and benefits. That's an area we sample in and select some specific transactions to walk through your payroll controls and to test for accuracy, the payouts. General disbursements, once again, an area we sample, select a random sample of disbursements and look for that they look proper and they're properly authorized. Capital expenditures, financial close and reporting, so your monthly reporting, your journal entry process, the controls you have in those areas. And then lastly, your single audit or your federal expenditures. For that, we select what we have to test as major programs and select samples from various different areas that we are required to test. To go over a few highlights from the financial audit, we're still in process, and we'll talk about that a little bit at the end as far as what's left. So this is all draft, but we expect to issue an unmodified opinion. Unmodified meaning no modifications to our opinion, or a clean opinion. We did something unique in this year's report that AICPA has actually guided us all on, is because of COVID-19 issues happening after year end, what the AICPA is suggesting for everyone is having a footnote disclosure, and we also have an emphasis of matter paragraph in our audit report explaining that there has been a subsequent event occur after the date of your financial statements related to COVID. It's unknown really what to expect in finality from all of that, so there's just some uncertainties there. So there's just a paragraph in your financial report about that is different from last year.
And that is covering the cost of it, or just the impact on the system as a whole, or what's the tenor of
It's really to cover both that your revenues could be impacted from it, that your expenses could be impacted from it, your employee workforce. But so far, it's been kept very high level in general, just that COVID has created a lot of uncertainty in your financial transactions for 2020.
Okay.
And then the two reports I mentioned that would be issued as part of the uniform guidance or the federal single audit. There's an internal control report over your financial statements as a whole, your CAFR as a whole. And then there's also reports specific to the federal funding testing. And those two reports also we expect unmodified or clean opinions. We do have a finding that we'll go over that would be referenced in in the financial statement report, and we'll go over that on a few slides later. Continuing financial highlights, there's a lot of numbers in there, so just some high-level information here. Your current assets on your CAF for this year decreased from the prior year approximately $7 million, so 2018 compared to 2019. That was mostly in your cash and investments area. You can see that somewhat offset by the item below it, where your non-current assets increased by $12 million. And that's primarily related to purchases of capital assets during the year, minus related accumulated depreciation. Deferred outflows increased $16 million. I'll talk about that in a second because there are a lot of things related to pension here. Then your current liabilities decreased in 2019 as compared to 2018 by approximately $10 million. Last year at the end of 2018, you had a large account payable related to a capital purchase, some bus purchases that was occurring right at the end of the year. So just kind of a timing item there. Then your non-current liabilities increased approximately $47 million compared to 2018, and your deferred inflows decreased approximately $14 million. So you can see three items there mentioned: deferred outflows, deferred inflows. Those two almost offset each other, the $16 million and the $14 million. But then the the non-current liabilities increasing by $47 million related to pension. As you know, since the adoption or implementation of GASB 68, related to now recording these pension liabilities on the face of your financial statements, that has created a significant liability that unfortunately can really swing drastically from one year to the next. And for 2019, at the end of the year, it has swung to the worst, I guess you'd say, increasing expense and increasing the liability, primarily related to, there can always be changes in actuarial assumptions and things, but the big issue related to pension this year was the drop in investment values. The investment market not doing very well in 2019 made the investment balance less and increased in your liability. So that's something that unfortunately is hard to predict, and it can swing from year to year. And that's where it sits at the end of 2019. Go ahead.
That doesn't create any obligations for us, right? Like I know in the public sector, when you have your own pension, you have to keep investments up to some percentage of the obligation. This is all stuck in part of OPERS, right?
Yes, this is all part of OPERS, and none of this is considered a current obligation. It's all long-term, like you say, based on these actuarial studies.
But in my world, I'd have to keep it up to a certain 85% of the funded line or something like that. No obligation like that here.
Right, no, just they come up with your required contribution each year. But yeah, there's no specific percentage obligation that I'm aware of.
Does that mean we would expect that to go up if the gap is growing?
You guys, what's your, Alan or Michelle, you already know, obviously, your rate for 2020. Did your required rate go up? I don't remember the rate.
No,
No, it did not.
no change. No change.
Interesting. Thanks.
Overall, your net position, so net position meaning your assets minus all of your liabilities is your net position, that decreased approximately $2 million. And in my mind, that's very good considering what we just talked about, knowing how much your pension liability increased for the year. The next page, we're talking about the revenues and expenses, some highlights there. Your operating revenues for 2019 totaled $23 million, and that's up $1 million from 2018. Net non-operating revenues, approximately $85 million, $81 million in 2018, so an increase there. That's made up of primarily city revenues, federal and state operating grants. And then your last large revenue item is capital grant revenue. And you can see you had a significant increase there of $32 million in 2019 versus 2018. Sorry, my lights just went out. Expense-wise, your total expenses increased for the year, $18 million. Explained a lot below by the labor and fringes line item being approximately $91 million compared to $76 million in 2018, and that's where the majority of that pension expense increase flows through. Plus, you had an increase in salaries, COLA adjustment, and increased training costs. Now that's a quick summary, high-level summary of your financial highlights. If there's anything you want to talk about there further, we can. Hopefully a lot of the information you've heard about throughout the year, with the exception of the pension adjustments that just get made at the end of the year. One of the other deliverables I mentioned is the governance communication letter. So here there are just certain required items we want to share with you as part of the governing board. Overall, during the audit process, we didn't have any changes in the scope of our audit. We do want to point out that on the accrual basis of accounting, there are a number of estimates, and so it's not just the simplified cash in, cash out. Just to highlight the estimated areas of significance, your depreciation, how your capital assets are depreciated off, that's an estimate based on the estimated useful life of your assets. And then the next three items are self-insured accruals related to workers' compensation, general liability, property damage, general liability coverage there, and health claim self-insurance coverage. All of those this year were based on actuarial studies that look at loss history, loss reserves, and what basically your expected costs were for the fiscal year, and a liability was accrued at year end based on those actuarial studies to get all estimated costs associated with any of those claims into the correct fiscal year. And then, as mentioned before, your pension liability and then your OPEB liability, those are both liabilities and the related deferred inflows or outflows that are estimated based on actuarial studies. Wanted to share with the board and audit committee if there were any difficulties in the audit process. Just as you know, as everyone knows, COVID hit, and that did slow things down somewhat, frankly. So I think we were here talking to you guys in early June last year. So things have been delayed, but in my opinion, could have been a lot worse. So we are getting really close to wrapping things up, and glad to be here presenting to you today in July. And then we did not have disagreements with your management group as part of the audit process. If we did, we'd want to share those with you as the audit committee. Other items to mention, we did propose some adjusting entries. We'll talk about one of those in a minute. That was a larger item. And then past adjustments, what that means is if we run into other things that we feel should be adjusted to be in accordance with generally accepted accounting principles, but they're smaller in nature, we accumulate those to make sure they don't grow to a large number that really does need posted. And those will be attached to your governance communication letter too. Those have not added up to any significant dollar amount, so it's okay to pass on posting those adjustments to your general ledger. All right, the internal control letter that I mentioned and any compliance findings, we're working on drafting these and still wrapping up a few areas, but this is where we're at right now. There was one material or significant adjusting entry that we proposed, and excuse me, and that will be mentioned in your internal control letter. That related to the way that self-insured health claims were being recorded was triggering an excess expense and liability by the end of the fiscal year. And so we recommended an adjustment to reduce that to your actual claims that have been incurred but not reported yet, the liability that was estimated by your actuary. So So we did have conversations back and forth about that, and I think in the end we got on the same page about how that should be shown. I know that was a new area over the past few years, so I think have that understanding now of how that should be recorded at year end and going forward. Then other matters, these are just kind of some other recommendations that we have. They don't rise to the level of a significant finding, but items we wanted to point out is there were some capital asset disposals related to some buses that were not removed from your capital asset listing during the year. And we saw this happen last year too. The good news is this doesn't have any net impact on your financial statements because these items were fully depreciated off. So there was a cost to remove and accumulated depreciation to remove, but the net balance was zero. Then the next item mentioned there on page 10, you have to upload financial information to related to your Ohio compliance requirements. It's called the Hinkle submission. And it's really supposed to be in somewhat final format when you do that. That had to be done early enough this year, even with extension, that there were still changes being made to your financial reports. So that's an item that the state of Ohio just expects us to report that there were still changes being made from what was submitted initially to the state versus what will be the final financial statements. Then the last item there that's related to the Uniform Grant Guidance or the federal audit, the CFA is your schedule of expenditures of federal awards, and that's something you guys, the financial team puts together for us, and then we determine based on what your federal awards, what programs we test. And there were some missing federal funds from that this year. It only totaled, I want to say $350,000. It did not impact what programs we were testing, but just something to watch for, a recommendation to really watch for, and making sure you have that schedule of federal awards complete going forward. Overall, I'd say considering the magnitude of your entity and the size, this is a very clean report, very few findings. We had two material adjusting entries last year, and those were both corrected this year, did not recur. So I think this is a pretty good report. If you have any questions on these items, you can let us know. Then just to talk about upcoming emerging issues, the GASB did decide to be nice, and any new GASBs that were coming up due to be implemented anytime soon, they did postpone. So to give everyone a break with all the other issues going on. So there really aren't any new significant GASBs that we need to talk about that are going to have a significant impact on you in your 2020 fiscal year. Page 12, as I mentioned, we are still working to wrap things up. We have some single audits, some of that federal work to complete, certain areas of the audit process we're still wrapping up, some accrued liability revenue sections, some inventory stuff. Then some of our last procedures are, since our report date will be when we get the final attorney letters, when we get these final procedures done, we have to look at all activity that happened after the end of your year too. So we'll do some inquiries about any significant things that happened after the end of the year, commitments, contingencies, and subsequent events, to make sure there isn't anything that needs disclosed in your 2019 financial statements. We also, once all this is said and done, we have one final last quality technical review. So that will occur. If there are any changes of significance to the draft CAFR that you've been presented as of today, those will be shared with you. Hopefully there would not be any significant changes, and I don't think there have been in the past. Then finally, a representation is signed by your finance team, your management team, just saying they have shared with us everything that we've asked for to the best of their ability. And then it will be ready for your guys' final approval at that point in time. That is all I had. I know a quick synopsis of all the hours that our team and your finance team put into this. And I do want to take a second to thank Alan and Michelle and their teams for, especially in this very crazy, unusual circumstance, how much time and effort has been put into the audit process and getting us all the items that we ask for and we need. So we do appreciate that. Does anyone have any questions for us?
Not here. Good job, everybody.
Thank you. And the draft CAFR was included in the board packet, so you'll see the draft there available for your review too. If there's ever any questions, feel free to give myself or Helen a call, and we'll be happy to address and also provide Hope and Tim your information too if they need to address anything directly with you.
Sounds good. Thanks, Michelle.
Thank you very much.
Thank you, Hope and Tim.
Appreciate it.
Thank you.
Should we drop off now?
Okay, moving on to the financial report for June.
Thank you, Heidi. So with our presentation, on the first page, you'll see that we still try to find some good news during these times. One of the big things that happened in June was the hero pay was paid out to all of our frontline associates based on the qualified hours worked from March 24th through May 31st, which was the stay-at-home orders implemented by the state of Ohio. So it's $1.3 million as approved by the board. Our operating expenses, such as fuel, parts, and wages, excluding the hero pay, were all favorable to budget. And in June, we received the first tranche of our buses coming in. So we've received the first 13 of the 29 buses scheduled for delivery in 2020. I'm sure John Ravazio will probably speak to that a little bit further in his presentation as well. So I don't want to steal his thunder. And we do, as much as there's great news, there's also some challenges ahead of us. Butler County service was stopped in June per their request. This will result in some unfavorable contract revenue going forward. It will also provide some favorable expense revenue in the coming months until service begins again. Metro returned to full service on June 28th, which will result in increased operating expenses caused by higher wages, including increased overtime wages, as well as higher fuel and higher parts cost. July will be the first full month that we realize the full impact of going back to full service.
Michelle, the Butler County service stoppage, that I assume is a result of COVID?
Yeah, the lack of ridership.
It is. Heidi, ridership was down in the months of April and May, 96% in each month. And express ridership overall remains considerably down. We stay in close contact with Butler County, though, in terms of how we will be ready when they make the call to go back to operate.
That makes sense. Thanks.
Thank you, John. Moving forward, looking at the financials, you'll see the financials for the 6 months ending June 30th. Total revenue of $7.3 million was unfavorable to budget by $728,000 or 9.1%. Total expenses of $9.3 million was unfavorable to budget by $857,000 or 10.2%. The deficit for the month before using the CARES funds to balance was $2,006,000. Funds from the CARES Act of $2,006,000 were used to balance the operating results in June. Our total operating results before balancing with available funds were unfavorable by $1,585,000 or 376% for the month, and unfavorable $3,265,000 or 129% for year to date. Some of the most significant drivers for the results of June was fair revenue was unfavorable to budget by $712,000. Metro fare revenue was unfavorable to budget by $651,000 as a result of a 50% fixed route regular ridership decline directly related to COVID-19. Non-transportation revenue was unfavorable to budget by $77,000 or 44%, primarily due to the investment income of $37,000 unfavorable and unfavorable advertising income of $44,000. The state subsidies was unfavorable to budget by $37,000 or 16% due to reduced diesel tax purchased for the month, which resulted in lower reimbursement from the Ohio fuel tax reimbursement. This unfavorable revenue is almost entirely offset by favorable fuel tax expense. Employee wages and benefits are unfavorable to budget by $954,000 or 15%, primarily due to the $1.3 million of hero pay in the month. parts and supplies were favorable by $127,000 or 24%, primarily due to the lower than anticipated revenue vehicle parts expense of $140,000. Any questions on the financials?
Just a quick question going forward. So you took the 1.3 million out, you have a $700,000 deficit, but
Yes.
we weren't back to full service yet, which is going to cost much more, do we think?
Well, the wages and benefits was positive by about $400,000. And yes, once we go back to full service, then we would experience much higher increased wages and benefits.
As well as fuel, parts and supplies, all the things that go with adding additional service grade. You are correct.
So if we didn't have the hero pay and we were at full service, what do you think the deficit would have been? Maybe that doesn't have it for next week. I just think it's important as we think through future budget.
Yes, we'll take a look at that in some detail, Craig. And if that's okay, we'll mention that in the report next week.
You may not have this answer yet, but just curious, with the decision of CPS to go to a blended learning model next fall, do we have any idea of how that's going to impact the budget coming up?
So currently, CPS has decided to do the blended. I'm sure it depends on what happens with COVID-19 between now and the middle of next month if they continue down that path. They had another meeting yesterday to continue that conversation. Where it stands right now, because half the students will go Monday, Tuesday, and Wednesday one week, Thursday and Friday the next. The other will flip that schedule to keep social distancing on the bus. The current situation is they will run the exact same level of service for this school year, which will decrease the amount of students on the bus by about half. So right now, the plan is for full bus service for high school students for start of fall semester. That could change based on what happens with COVID-19.
Thanks, Daryl.
Moving on to the next page, this is the monthly update to provide the current status of our hedging and compliance of the hedging policy. As you'll recall, we fell out of compliance with our hedging policy back in March when we reduced service. So working with our fuel hedging advisor, we are now back in compliance. Going back to full service also naturally helped us put us back within policy limits as well. The June 30th hedging position is currently an estimate as final numbers are not yet available, but those will be presented in the full quarterly hedging report next Finance Committee meeting. So you'll see we are now 90% hedged for 0 to 24 months and 35% hedged for the 25 to 36 months, which is within the policy limits. And the last slide, this is something we've been adding over the last several months just to kind of continue to show the impact of COVID-19 and what it's doing to SORTA. For the current period, 4 months since COVID-19 started, it has had an impact of $4 million for the months of March through June. We expect this obviously to continue to increase as we go forward, which is why the CARES Act funds are so important to SORTA, as the COVID-19 will continue to be felt for several months with additional PPE and lost revenue. And these are items that are specifically identified as related directly to COVID-19. Any questions on the financials for June 30th?
Good, thank you, Daryl. Last but not least, investment fund report.
Great. Thank you, Heidi. You'll find the June 30th investment of funds report. As of June 30th, SORTA's cash and investment balance was $8,469,401, yielding a return of 0.68%, an average days to maturity of 8 days. This is a decrease in cash of $9,657,855 from the month of May. Monthly investment income was $7,882 for the month, and year to date is $127,380. Some of the current drivers for a reduction in cash this month was specifically we received June's city transit fund was received early in May. We had some fuel hedging margin, the hero pay, and also in the month of June, there was 3 regular payroll payments made in the month. Usually we experience 2. We expect to see this to increase. Our cash balance will go up once we start drawing down the CARES funds, which will be by the end of June, within the next 30 days. Any questions on the investment of funds report?
Yeah, it's scary.
Yes.
Any other questions or comments? I agree with Craig. That's a little terrifying. Okay.
And once we receive the funds from the CARES Act, we already identified well over $20 million of expenses from the first 6 months of the year that we can submit for reimbursement from CARES. The final process was completed for us to be able to start drawing down just a few weeks ago. So we'll start drawing down immediately.
Okay. Great. Okay. If there is nothing else and no other items that I'm aware of, we can move to adjourn. Thank you, everybody.
Heidi, I think you have to vote on the investment of funds report.
I am you would think this was my first finance committee meeting today. Man, oh man. Sorry, everyone. We do have to vote on that. What a day.
The investment of funds report.
I will second it. All in favor say aye.
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 All opposed say right. Okay. That is passed. And I think now I can adjourn. Maybe I need more coffee. I don't know. But thank you, everyone.
Thank you, Heidi.
Have a good rest of your day.